Hello to another vlog. Today we are talking about Chinese companies and their US American competition and why it's so important for the US companies to be in China, as well as how they differentiate between the Chinese version of the US version or other way around. So make sure to stay tuned till the end. It's very interesting, and let's go. Welcome to the channel of Wolf of Dubai, where you will get always the breaking news on stocks. You will get very informative vlogs about business, money and Wall Street, and make sure to subscribe and smash that thumb up button. So first of all, why it's so important, the market of China for companies. First of all, they have the biggest ever population, even more than India. India is just about below 1.4 billion people, and China is number one. Still, the curve of Indian population is constantly rising, but China is still number one in population, so they have a huge market. Second, they have the biggest middle class in the world. The middle class is considered if the household have more than $10,000 to spend per year, and this is the biggest middle class ever. And you know, there's the middle class, then there's the lower class and the higher class population. You know, middle class and the higher class population obviously have a lot of consumable power, so that's why it's so important. And the last thing, of course, they are very tech savvy. So actually they are very big in electric vehicle market. They are very good in e-commerce, and they like to spend money and use these newest technologies, which helps to grow companies, especially in the tech business, but also in the other retail business as well, which we will dive into. So that's why the market is so important. So let's dive into today two companies that I will compare, or actually four companies. So it's two pairs of companies, China versus US. It's very interesting. Stay tuned. So the first US company that we will talk about today is Starbucks. Starbucks is a very, everybody knows Starbucks. I don't have to go in depth on Starbucks because it's a premium coffee retail business, the biggest one in the world. They actually started as selling the coffee packages, but then discovered the people would be able and would be willing to consume the coffee inside the shop with some free Wi-Fi, or they would take it for takeaway. So there's a market for people that want to have good coffee on the go. This is how they started and grow to a $115 billion Wall Street giant, which is amazing. I love the concept. You know, there's obviously I am not supporting to buy a lot of Starbucks every day, because you know, you can take this money and invest in stocks and have much bigger return. But of course it's a great concept, and they are almost or more than 2 decades, so 20 years in China already. They have about 3,500 shops, and they are declining in growth in China. So towards the end of last year, they growth was below 1% sales revenue, which is, you know, a bad sign. And in general, the Chinese industry or the Chinese market is rather a tea market than a coffee market. So, you know, the concept works. They make a lot of money over there, but there's a new kid coming on the block. It's Luckin coffee, which basically selling also you know, the higher price coffee, but not so high like Starbucks. But before diving into that, I want to also look on the Starbucks stock. So you can see here that the PE ratio is about 34, which is, you know, a little bit on the higher side for my personal opinion. And you have also the PS ratio of 4.7, which is also too high if you would ask me in my preferred fundamentals data when I look into a company or into investment. However, you know, with a market cap of $115 billion, they are definitely the biggest coffee shop around. So Luckin Coffee was just founded 2 years back in October 2017, and they are growing like crazy. I'm telling you, they want to surpass the 3,700 stores that Starbucks has already in this year. So actually what they are trying to do is they want to open 4,500 stores, so 800 more than Starbucks has up to today. And this is of course a big challenge, and their concept is a bit different. So their concept is that the coffee is a little bit cheaper, but they are specialized in delivery as well as online shipment or online orders. So you know, people like to order online and deliver their coffee into the offices and so on. So you know, they are very strong in that, and they're taking a different approach, which is maybe the better approach for an industry in Asia, where you know, everybody is connected, everybody works with WeChat and so on to deliver and to order things, you know, to pay for things by telephone, and they have their offices around. They work like crazy in China. They do so fast growth. I never have seen anything like this. I mean, Dubai is very fast, but China, hell, there's nothing faster than China, I guess. So actually, you know, while the people are at work, they don't have like 10-15 minutes to want to wait at the coffee shop. So that's why I think the concept works maybe a bit better than Starbucks coffee. Let's dive into the stock of Luckin. It's a stock company. They are on Wall Street, Nasdaq since June, so about 2 months now. And their market cap is almost $5 billion, so much smaller than Starbucks. And the revenue number, of course, you know, the revenue grow year over year is obviously crazy because they're putting all these shops out there. 700% almost year over year revenue growth, which is mind-blowing, right? Yeah. So actually they also offer something, you know, when the order is spilled or takes longer than half an hour, they will give you something else, or they will it's for free. So they have a lot of nice things that they implement. And I also heard that Luckin Coffee is actually coming to Dubai and to the Middle East, so they are expanding also internationally, which is, you know, great for the company. I believe that, you know, if you're looking into a growth stock, then Luckin is definitely the option. They are still losing money, about more than 100 billion US dollar, but on the way sometime, hopefully, to profitability. And Starbucks is obviously, you know, the cash cow and the more value for the shareholder. I think they pay also a dividend. So you know, the overall picture, if you want to have something that grows really fast but is also risky, go for Luckin Coffee. If you're looking for something more stable and you know, more stable and regular returns on your money, like dividend and smaller gain, then go for Starbucks. Let's dive into the next tech giants. Let's go. So the next two companies that we will compare is Tencent and Facebook. Facebook, obviously the giant for social media worldwide with Instagram, WhatsApp, Facebook platform, and also Tencent with, you know, WeChat as the main social media product, and is seen as the Facebook of China. So very interesting. Let's dive into the Facebook stock first. So the Facebook stock has almost over 530 billion market cap, is therefore the biggest social media giant out there. And if you want to do something with social media, Facebook is on the table. On the other side, if we are looking into some fundamental data here, PE ratio is a little bit more of a 30, PS ratio a little bit more than 8.5. Which is, in my opinion, already a little bit on the higher side. But if you're confronting this with Tencent, Tencent has a market cap of almost 400 billion US dollars. A PEA ratio also just a little bit more than 30, and PS ratio 8.8. So the stock, beside, you know, Facebook is more valued with 130 billion, a little bit more than Tencent, but though they are quite similar into the generic valuation of the stock. So let's have a look on the product of Facebook. Obviously it's very known what Facebook is doing. Facebook is, the biggest social media giant with all the products that I mentioned already, though there's a very simplified and quite easy summarizable thing for Facebook to say in China: it's not allowed. So it's blocked by the China government. I think it's because of the Chinese government don't want that a US company so big and powerful like Facebook could have so much information and data on Chinese people, and I think this is the main reason. However, you never know what are the real reason behind it, and so I would like to go now into the product, or one of the main products of Tencent, which would be WeChat. So quickly, in general, Tencent is around since 1998, so quite more than 20 years on the market, much longer than Facebook is. Their most important thing is that they are the largest gaming company, they are one of the most valuable technical companies, and they are one of the largest social media companies and one of the largest venture capital firm and investment corporation. So you have to all know this, because we are diving now only into one product of them, which is WeChat, and why it's so important and powerful compared to Facebook. So WeChat is an app that lot of people in whole Asia is using, over 1 billion users worldwide. And I see this also here, the company start to attract Chinese people by offering WeChat functions. And WeChat is actually an app where you have Twitter, Facebook, Google Maps, Tinder and Apple Pay all in one. And even older Chinese people who cannot read can use the app by FaceTime, or I don't know how it calls the WeChat, but by video conferencing, and texting with some stickers and animations. You can find anything on WeChat. So you can actually, you can book your cab, doctor, food, ticket and whatnot. So they have the big advantage that people can stay on one platform, on one app, and can do 80% of their lives. And essentially they have a different business model to Facebook, which we will explain now. So Facebook is really concentrated on advertising. They are the biggest advertisers, media advertisers worldwide. Meanwhile, they have really big data on users, which they can sell to advertisers, which is very valuable. However, WeChat or Tencent don't have this much and deep data of clients, so they cannot advertise so well on their products. However, they are more diversified. So as I said in the beginning, they are getting revenue almost 50% through their gaming industry that coming to this Tencent, and also WeChat is delivering revenue. They delivering level revenue through venture investments. So you see, on the long term, it seems that Tencent has a better and more diversified business model than Facebook, which is mainly dependent on ads. I think even the ad revenue for Facebook was like 85%. So it's critical if something wrong with this model that Facebook would be in trouble. So here's also a thing. So you might think that Chinese companies copy a lot from US companies or in general, but if you look into what WeChat had versus what Facebook had, you see that WeChat for example had the first cooperated WeChat section. So when a company would open a WeChat for its company, so people can interact on social media with company to have customer service through the social media application. This came then later on into Facebook by Facebook pages. So this was actually invented by WeChat and Tencent and copied by Facebook. So this general assumption that Chinese companies copy everything cannot be true in this case. So let me know, guys, what you think. I believe China is still a very interesting and high profitable market for investments, and this is very interesting to see how the counterparts of the US companies develop. You know, they come a little bit later to the game apparently, but stronger, faster, and maybe also more profitable. We will see in the next couple of years. Make sure to check my other videos on my channel as well. Subscribe and thumb up the button if you like it. Thank you for watching, and see you tomorrow.